What's up, guys? Welcome back to Zodiac Trader. So today in this episode, I'm going to introduce the very brief history of Japan's economy, how it went through a bubble, and the reason, cause, and effect of Japanese QE and QQE policy. And of course, we're gonna discuss the reason why Japanese yen is so cheap right now, and a little bit of my take on Japanese yen, um, of the trend and how we trade. So in this episode, we're gonna cover a lot of useful information. So I highly suggest um, you can go back from the very beginning, and take it slow to really understand what I'll be covering in this video, because these are really important information that you probably don't gonna see. You're not going to find it elsewhere, because there are many YouTube channel that talked about economy, how to trade, but I don't think that they really cover uh, what's going on with the Japanese economy right now. So in this episode, we're going to discuss briefly about every factor that's influencing Japanese yen's value up to now. So today, let's have a little bit quick review of Japanese economy system and a little bit of its history. We all know Japanese economy had suffered greatly ever since the 1990s. So we're seeing that we a lot of economists be saying they had this phrase of the lost decade, and this term is specifically created to describe how Japanese economy went through an economic crisis, and then its GDP growth went down, and so people are suffering, and you're seeing Tokyo, the real estate price in Tokyo, and the stock price plummeted, and hence the reason why people are a little bit reluctant, especially for Japanese people, to invest or to spend money ever since these huge bubble collapse. So there are many reasons why Japanese economy suffered huge, I would say, setback during 1990s, during the 80s, and I think the key reason why is because the Japanese economy was running a huge economy surplus, which means you because back then Japanese company produced one of the best quality products, so people around the world would love to purchase Japanese product because it's cheap and it's high quality. And as a matter of fact, that you're having a lot of economy surplus, meaning you're actually a lot of people are making a lot more money uh, than people who are buying from them. So you're seeing during the 1980s, 1990s, before that, Japanese are making a lot of money from European, from American, because Japan exports cheap and high quality product, and hence why you have people are making money. Japanese economy was booming, and hence why the real estate price has gone up, and also the stock prices also skyrocketed. But that economy bubble doesn't last for a very long time, and after the Plaza Accord, the U.S. kind of started a trade war with Japan, and kind of forcing the Japanese yen to raise and the dollar to devalue. And as a result, Japanese yen was traded a lot higher, and because the Japanese bank, they, even though they are seeing a lot of signs of overheating of Japanese economy, but they are still not determined to raise the interest rate. So that's why they kind of make a huge mistake of the timing of raising the rate. The Bank of Japan raise of the interest rate a bit slow, hence why the economic bubble was plumping in a very rapid scale. So it's kind of speeding up really quickly. And that's why Japanese economy bubble, because the central bank failed to take necessary actions, the bubble just grow. And because of the Japanese yen were further strengthened, while the dollar devalued, that we were seeing the Japanese economy suffer, and because of the more of expensive Japanese yen, Japanese companies are no longer available selling cheap and high quality product as it used to be, because the Japanese yen just traded higher, and consequently, Japan economy actually suffer a lot, and you see it because they all have a lot of big companies. People stop spending money, and the real estate and also the stock market collapse. People like companies are reluctant to hire more, and companies are no longer profitable, and that just kind of becoming a self reinforcing down spiral. Because of that down spiral, Japanese GDP used to be good, but then it kind of become a like disinflation kind of scenario. So you're seeing a Japanese economy shrinking, and GDP goes to negative, and asset prices collapse, and you see less inflation, and you see the entire economy started to contract further. That you're seeing a shrinking economy. Which is and that kind of deflationary economy environment became kind of like a cancer for the economy system, and because of all that, in be the Japanese central bankers decided to save the Japanese economy from disinflation, because they don't really want to see the Japanese inflation running around like below zero. They would like their inflation go back to like normal 2%. So that's why we're seeing these kind of rapid economy, and those Japanese monetary policies such as QE and QQE decided to take place to inject liquidity of the Japanese economy system, because Japanese economy was so bad, and that inflation was very, very bad, and it's difficult to maintain a healthy and also stable growth of economy. So that's why you're seeing after 1990s, when you're seeing like in the year of 2000 and the year of 2000, after 2008 and 9, many times you see Japanese inflation's going like the Japanese inflation gone down below the zero. So you're seeing from time to time the Japanese inflation rate was it's very, very low, and even negative, and which is bad for the economy, because if you really want to have a healthy economy, you want to have an expanding economy, you need to have your inflation control back to 2%. And because of all that, to avoid the Japanese economy further shrinking or further contract, the monetary policies those monetaries decided to embed these unconventional monetary tools to inject liquidity to Japanese economy system. As a result, that makes Japanese yen very cheap, and which is explained why right now you're seeing these very cheap yen, because after like Abe, uh, its main policy is to keep Japanese yen weak, so you can have people attract international investors putting their money in Japanese economy system, or to invest or to travel, um, because the yen is cheap, and in that sense, Japanese products are cheap and high quality, and also I would say very very competitive. So the weak yen policy was designed to help the Japanese economy system to stimulate its inflation, and also to bring more foreign capital flow inside of Japanese economy, which is reason why we were seeing yen also very cheap. And the other reason why the Japanese yen is so cheap is because that um, because the Japanese yen, in order to inject further liquidity, the Japanese monetarists have had to put their interest rate of the central bank very low, even negative. So that's why we're always saying about like negative rates policy in Japan economy. The reason why is because they want to further deregulate, to further stimulate the liquidity out of economic system, the Japanese economic system, to stimulate that inflation. So that's why you have a very, very competitive interest rate. That means if you're living in Japan, if you buy a house, if you pay for car mortgages, the central bank, because it's the negative interest rate, you don't really pay for interest because the government wants you to borrow more money. But because most of the majority of the Japanese consumers are very, I would just say, kind of, um, they don't really believe what the government's saying. So the Japanese consumer refuse to pay, refuse to spend money, refuse to borrow money. Instead of borrow money, they would prefer to, save up the money, put the money in the bank. They don't really want to consume. They would really want to put their money in a very risky. I would just say, well, for example, like Bitcoin or stock trading and etc. People don't feel safe when when they are dealing with their own wealth. So that could be a problem, because if that applied to every household in an economy system, that means it would be extremely difficult for the government to stimulate the consumption, especially to stimulate the GDP growth, because people, um, you expect when you when you lower interest rate, the cost of money is becoming cheaper. So you don't charge money when you uh, try to lend out this money, but people refused to borrow money. That could be a big problem. So basically, that is the reason why Japan economy suffer, like for the last decade, because ever since that huge plummet of Japanese economic bubble, the Japanese people, if you ever live in Japan, you understand that inside of their heart is their parents are still afraid and heavily shocked by the the 1980s kind of bubble collapse. So that is the key problem of the Japanese economy, because the monetary it doesn't matter what the prime minister or monetary people, it doesn't matter what monetary policy they're going to embed. People are still reluctant to consume. People are still reluctant to spend money. And instead of putting money in the stocks, people save up money. Instead of going out, spend for more money, buy Ferrari, people save the money. Instead of, and most financial institutions, they don't really want to take any risks, so they would just buy bonds, right? They would just make that nice 2 to 3% of interest rate. So that kind of environment is really bad for economic growth. So because of all that the Japanese people, the Japanese economy system has to embed the low interest rate environment to further stop the consumers to, I would just say, put it this way, they would just they want to use the low interest rate as a leverage to encourage people to take risk or lower the cost of money to increase the I would just say the liquidity of the financial system. but it's not really kind of working. It just kind of keep the Japanese economy from collapsing. But which is the reason why they introduced the low interest rate currency environment in the first place. So that kind of environment creates a direct consequence, which is a cheap yen environment because if your interest rate is so low, that means you can, as a financial institution, you can borrow cheap yen, and you can use that cheap yen to, I would just say, buy American stocks or buy a lot of high interest rate assets, and you can make money out of the difference of the interest rates. So that became like a carry trade kind of strategies. So that's why Japanese yen has good liquidity because international investors are basically they are trading uh, Japanese yen because they could use carry trade strategy to make solid amount of profits, and which is the reason why international investors tend to sell Japanese yen. So that is the reason why Japanese yen is cheap, and it is cheap for a reason because Abe, the Prime Minister Abe, allows the Japanese yen to go low, and the Japanese monetarists and also financier want the Japanese yen to be cheap, so the economy could be competitive. The companies could sell more products. People could visit Japan. People could travel to Japan to kind of further stimulate the economy, to save, to give more jobs in the economy system. But even though you have all these policies, but still, Japanese economy is unable to keep the inflation stable at 2%. So that would be a problem. And now we're seeing there are several different changes that happened, taken place recently. I've been saying all this in the previous video where I was covering about the nature of Japanese nuclear control policy. We call this YCC. And I have explained how YCC is working and its effect in the modern monetary policy and its system. So that is part of QQE as well. And in the future, I'll make a video and I will explain what is QQE. But now that just focus on YCC. So because you have the Biden administration, they try to save the economy, trying to put another stimulus to the economy system by printing more money during the 2020, ever since the COVID. And the direct consequence and impact is that the global inflation just climbs up because you have monetary people being printing money. That's why you're having inflation. So it would be good for Japan because it's difficult for Japan to maintain a 2% inflation. So for Japan, it's more of like it's kind of expecting the external inflation environment to help the Japanese economy to stabilize. So as we can see here, ever since 2020, in most of the time of 2021. Japan economy suffer in negative inflation. So, and right now, because of the Biden administration and its policy, you have a lot more inflation coming, and that's why in this kind of inflationary environment, it's a lot easier for Japanese central bank to acquire the inflation that they want. So, which is the reason why the Bank of Japan (BOJ) decided to end its yucca control. They decided to step out of negative interest rate. They decided to raise interest rate a bit, not a lot, and they decided even though they're still buying bonds, but they are not like it used to be. It used to be like Japanese central bank would buy whatever the bond they would to keep the yield stable, but now they have changed the different numeral targets, so they are not buying as much of bond as used to be. And also, in order to step out of YCC policy, they also stop purchasing ETF. So there are several signs, for all these actions, that what they're trying to achieve is that they're trying to have their monetary policy uh, go back to its normal, its normal status, because it used to be, to put everything simply, like if you're a patient, any economy system is like a patient. So if you're dying, right, you want to, if someone wants to keep you alive, you send this guy to ICU, right? You send whatever the drug needed to put it on this guy, just to keep him alive. So in this case, Japanese economy used to be the guy in the ICU system. So everything the abbé, the prime minister, and everyone trying to do is to just to maintain the living status of this patient, but unable to bring this patient out of ICU room. So stepping out of YCC, ending this negative yield territory kind of policy movement, it's a bit like, having the patient moved out from the ICU, so these patient could somehow become a noble guy, go out, take a walk, go to restaurants if they want. So instead of being like a patient who's stuck in the ICU system, you want this patient to slowly recover and slowly behave like a normal human being. So that is what the Bank of Japan want. But now, because the more complicated thing happened, because the Federal Reserve uh, decided, it used to decide to lower interest rate further. So the Main Street is discussing about all this, and I would say it would be a good timing for Bank of Japan to step out of YCC, step out of ICU. But now, because you have these high inflation plus high interest rate environment, so people are like skeptical of Japanese yen, especially the global carry traders, because these guys they like to sell yen, they like to buy dollar, right? They like to make money out of the interest rate differentiation. So there are, even though Bank of Japan is a big monster, but still, if you combine all the hedge funds, all the financial institutions around the world, that's a significant amount of money. So you have more people selling yen than the Japanese bank decided to long yen. So that's why naturally the yen goes even down further, and especially when the Fed decided to hold it like higher for longer, because of the inflation data is not like, for the U.S. inflation, it's not coming back down to 2%. So for that situation, uh, international investors decided to keep selling yen, right? And because the like yen is still cheap, and also the U.S. interest rate, it's not lowering, so that means carry trade yen could be more profitable. So that's why you see a lot of money flow. Traders started to sell Japanese yen, and right now it's difficult for the Bank of Japan to maintain its Japanese yen's value, to hold it above that Japanese yen around, like 155 level. So right now the Japanese yen is struggling. That we see Japanese yen is cheap. So, and now we're seeing, not long before, we're seeing Japanese yen traded even lower. The dollar yen was traded at 160. So now my thought is that I think it's difficult for Japanese yen to maintain strengthen, and Bank of Japan should really think about changing the strategy instead of blindly intervene the yen. or blindly just buy back, used up all its foreign reserve just to buy back yen. I think that would be a foolish kind of behavior, and I think Bank of Japan should instead of instead of being like play like a boy. I mean, like I think for Bank of Japan, it would be a lot better for Japanese bank to take advantage of a new low and cheaper, I would say cheaper Japanese yen to maintain or to kind of further stabilize its inflation. So in this video, we have explained a lot of things. We have explained about inflation. We have explained how Japanese economy, had a lost decade, and we have also explained why Japanese economy stepped into a negative interest rate regime, and why Japanese yen is so cheap, and how cheap is it going to be. For now, I think Bank of Japan needs to do more actions. It needs to lead the market instead of following the market. Okay, it seriously needs to take back its control. So, for all of that, I thank you for watching these long and tedious content. If you finish it, you should give yourself a big clap, because that means you are sort of like very intelligent individual. And so, if you like it, please subscribe and click that like button for me. And also, I'm looking forward to communicate with you in the comment section below. So I will see you in the next episode. Goodbye.